also a financial analyst, a corporate finance specialist at BDO East Africa, based in Uganda. My role here is literally to introduce Investia. Investia is a corporate finance and advisory firm based in Nairobi. They do, among the services they offer, besides transaction advisory, they do offer financial modeling training based on the FAST standard. The FAST standard is literally a structure that is followed when you're developing models. So it may be quite useful to those who are also corporate finance professionals. So, and for the beginners, it's a good way to start. So with FAST standard, you're referring to a model being flexible, appropriate, structured, and transparent. So those are the good standards to base your financial models on, which eventually help you in having discussions with investors at a certain point in future, or carrying out some budget, financial planning and analysis within various organizations you work in. So I'll take this opportunity to hand over to Steve to speak more about Investia and financial modeling in particular.
Thank you very much, George. Good morning, ladies and gentlemen. It's a pleasure to be with you and to talk about financial modeling. I'm just looking at the list of attendees, and I'm glad to see that there's a gender, how do you call it? You know, nowadays when we speak about gender balance, it's more about accommodating the fairer sex than it is about the male side of the gender. So I'm happy to see quite a lot of ladies who have joined, and I'm hoping for a very engaging, productive session. And I hope that you'll benefit from this discussion. So Steve Ogada is my name, and I represent Investia Africa. I'll just share my screen so that you can be able to see the material that I'm about to present. I don't know whether my screen is visible.
Yes, it is.
Oh, great. Great. So let me just start by saying that I'm really excited about this partnership between Investia Africa and CFAC because it gives an opportunity to the membership of CFAC, an opportunity to engage in financial modeling. Now, I remember when I was undertaking my CFA studies, financial modeling, unless today it is part of the curriculum, financial modeling wasn't focused then. So I gather, I suspect most of the attendees or members who've interacted with financial modeling have either built experience through on-job, by doing it on the job, or have attended courses offered by other parties with respect to financial modeling. So the beauty about then this partnership is that what then you've drawn, whatever experience you've drawn, either through working on transactions or working on or analyzing financial statements, that same experience, then you can be able to apply with just a little bit more structure in terms of forecasting, in terms of analysis, valuation, and so on and so forth. So for the purposes of today's session, so it's mainly an information session, and the idea is that we'd like you to know what the offering is about, how you can be able to benefit, and how then you can be able to apply in within your respective careers. So in terms of the content, I'll speak briefly about Investia and the FAST standard. I'll talk about the training, our course offering, and then you'd also get an opportunity to see the people or entities that we've been lucky to work with. Great. So about Investia, George had spoken about it. I'll just give it a bit more context. So we're essentially an advisory firm, and so what we do is we like to say we help our clients with respect to quantifying their decision making. So matters financial modeling and analysis, business valuation, capital raising, financial due diligence, financial appraisal, and in different sectors. We've built experience in different sectors, from FMCG, financial services, real estate, power infrastructure, transport infrastructure, amongst others. And we are passionate about financial modeling because, one, we follow a standard, which is the FAST standard. And the idea about the FAST standard is that we'd like to standardize how modeling is done. I'm sure most of you, if not all of you, have interacted with models, and you realize that the models are built in different ways. There's no standardization. So you find that, say, you're auditing a model, or you're reviewing a model, or you're basically going through a model, and you make one adjustment, and the model collapses, or you get hash refs, and that sends you into panic mode. But the idea around FAST is, and we'd like to say that FAST, what IFRS is to accounting is what FAST is to modeling, because FAST is a standard, and the basis is that we are standardizing how models are built. And so our vision is to have a group or a crusade of FAST modelers within East Africa, and by extension Africa. And again, why for us as Investia we are passionate about it is that then we've built various models based on the FAST standard. We've enjoyed the benefits of using the FAST standard, and we'd then like to spread the gospel, spread the word, so that it makes it easier for the people reviewing models or looking at models. It makes for an easier session. So FAST focuses more on the user of the model than the builder of the model. I'm sure within your respective organizations, you've interacted with these scenarios where a model, say, has collapsed, or there's some adjustments that need to be made to a model, and there's only one specific person or one specific resource who's then knowledgeable on that particular model, or who then can be able to make changes. Now, the beauty about FAST is that since it's standardized, the model build is standardized, then when we exchange, it pushes for collaboration amongst modelers. So when we exchange models and there are some changes that need to be made to a model, then easily you'll know where to go to make those changes, and you know where to go to see the output, and so on and so forth. So FAST, as George mentioned, is an acronym for flexible, appropriate, structured, and transparent. And I'll just go through each of those. So flexibility in the sense that, remember, model is built on assumptions. Now, you need to have a model for which you can easily change assumptions without necessarily having to change the whole structure of the model. So just to bring it into context, say today you built a model and you've applied, say it's a USD-based model. And of course, you've made certain assumptions about the KES USD pair. And perhaps you're projecting that there'll be a 5-6% depreciation in KES over, say, the next 10 years. In the event, say, that changes to, instead of 5-6, and it goes to, say, 7-8, considering the current global macro environment, then what you should be able to do is just go to the assumptions, make the change just on the FX conversion, without necessarily having to get into the calculation blocks. Those should remain intact. Yeah, so there's that. Another example will be maybe inflation rates. Maybe you made some assumptions on how inflation will change, or price, or volume. Again, about something about FAST is that if, say, you're projecting revenues, yeah, as opposed to taking then one block figure and applying, say, a 10% or a 15% escalation. So what FAST advocates for is then just being as granular as possible. So at the very basic level, revenue is volume times price. So then in your projections, you'll have your volume line, you'll have your price line. And so if there's an increase in revenue, then you should be able to establish whether the increase is because of growth in price, growth in volume, or a price increase. Again, when it is that granular and properly structured, so if, say, there's a decline in, say, number of customers, or a decline in the number of products, then you should be able to quickly change your growth numbers without necessarily having to change the structure of the model. Again, on appropriateness is then you're just applying, you're being concise in terms of the model build process, where just the right amount of detail, not too much unnecessary detail, which then would lead to a heavy model. I'm sure you guys have interacted with models where if you open the model, then your Excel either collapses, or you have to shut down everything else, your machine gets slow. So again, just the right amount of detail into the model. Structured, I talked about being structured, where you will then have a model based on FAST, where you have your assumptions on one side, you have your calculations on other sheets, and then you have your output. Okay, so the model is you can say that it's big laterally, or it's wide, looks heavy, but the beauty about it is that you can then be able to make changes to the appropriate sheets, which are the input sheets, and you leave the calculation sheets intact. So there's that element of structure. So it is not, it doesn't flow vertically where you've seen models that have everything on the same page, the assumptions, the calculations, the financial statements, ratio analysis, and so on. In this one, under the first standard, you'll have your constant inputs, your series inputs, then your calculations, revenues, cost, capex, and so on, and then your output sheets, financial statements, the dashboard, and so on and so forth. Transparency is key in a financial model build, and that is something that FAST pushes or advocates for, where, for example, you have one formula from the beginning, the first column of the model to the last column of the model. So you don't have formulas changing in between. No, it's one formula across. Yeah, that helps with transparency. There are no hard codes in the formulas going across. Think about, I mean, on the very short end, you could be having a model that is maybe 3 years, a 3-year forecast, or at the common level, 5-year forecast. But think about, say, a model where maybe a power model, where you're forecasting, say, a 20-year period based on a 20-year PPA. And as we know that that projects start from the development phase, construction phase, then the operational phase. So think about the amount of detail that will need to be in that model. So transparency will help in terms of then ensuring that you're very consistent in your application of formulas, of inputs, of calculation blocks. So in summary, that's what FAST is about and what it advocates for. And I'll move on to the next slide. I want to, in terms of time allocation, I'd like to be a bit more time, I mean, to restrict my time on the presentation so that then we have a bit more time on the Q&A or the interaction. So this slide just talks about what we've been able to achieve at Investia in terms of valuation assignments, commercial and financial due diligence, capital raising, financial modeling, training. So again, I'll just repeat the point that having experienced the benefits of using FAST, then that also informed our need to do training so that then, as I said, we can be able to spread the gospel. So again, this just talks about what we do, project and corporate finance advisory, capital raising, financial modeling and training, and public sector modeling. And we've done work in East Africa, West Africa, Southern Africa. So I'll talk about the training. So again, I don't think I'll need to define what financial modeling is. Maybe I'll just talk about its significance. So a financial model is a tool, basically. It's a tool that helps in decision making. And so modeling is basically putting together assumptions, putting together some calculations on a spreadsheet to see what your performance could be in the next 1, 2, 3, 5 years down the line. The tool will help you, one, in terms of valuation. It will help you when you're fundraising. It will help you establish the funding need of a business. It will help you also with risk management, because think about model stress testing or doing different scenarios, extreme scenarios, extreme cases, doing some sensitivity analysis. And in summary, that is the significance of a model. We've the other day we'd gone to visit a client in Rwanda, and they had done, and we had helped them in terms of quantifying their strategic plan. So we built for them a model that was to guide their strategic plan. And we were glad to know that the model helped to keep their teams honest in terms of KPIs, in terms of revenue targets, operational targets, helped also the treasury team in terms of efficiency in terms of utilization of resources, ensuring that there are no idle funds, ensuring that excess liquidity is placed, ensuring that they've priced, it's a financial services business, ensuring that they've priced their products well. And so they were very happy to have gained benefits from the model, and we are in discussions to help them in the next in their next strategic plan, which commences by Q2 of this year. So why FAST? So sorry. So we have, why Investia? We have experienced trainers. We have team members who have hands-on application of the business case, the different sectors, and so we can relate. It's not theoretical only, but there's a practical experience. Then our trainers are also FAST certified. There's a FAST certification that is issued for modelers who have undergone FAST modeling training and can be able to build FAST models. There's value for money. One, Investia is locally based, and unlike the Euro monies of this world and the other London, New York based entities, you'd be able to get benefits from a locally based entity that ensures that pricing is reflective of the local context and proximity to clients. Then there's additional value adds in terms of improving Excel productivity. In fact, I always like to say that if Microsoft had known how robust Excel is, they would have sold it as a separate package. I say that because to date, we've not fully utilized all the Excel functions, and every day is a learning day. But you interact with people, they think you're an Excel guru, yet there's still so much in Excel and what Excel can be able to do. So during our trainings, then, in addition to learning the technique and skills of financial modeling, there's also the added benefits of improving Excel productivity. So the other value add is the training is based on the FAST standard, which is an internationally recognized standard. I've spent quite a bit of time talking about FAST, so I won't belabor the point. There's certification, which then helps in terms of just recognizing that you followed, you've undertaken the FAST training. Then there's also lifetime access to online financial modeling resources. I've spoken about FAST, no need to talk about that again. In terms of our approach, how we like to undertake our training is that we first undertake a needs assessment, just to get to see what the issues are, what the concerns are, what the participants would like to learn, to know about, to learn. Then we would prepare our content or training material based on what the needs assessment results provide. Then we deliver through either online or physically, but in the advent of COVID, most of our trainings have been online, and there's been some efficiency achieved with that. Then lastly, after training, we'll then do a survey just to get feedback from the participants in terms of what their experience was, what they've been able to learn, and so on and so forth. Our course offering, there's the online self-study option where we have some material online, both corporate and project finance, financial modeling training. And this then participants would undertake at their leisure or at their speed. So it's basically self-paced. And again, it is, you have lifetime access to that. Then there's the cohort option, which then we've shrinked to a period of 6 weeks, where there's you get access to the online material in addition to live online sessions every week, about 30 minutes for Q&A. Then you get some facilitator sessions. You also get some sessions with industry experts, just to be able to give an opportunity for them to give their view in terms of what their experience has been. Then there's the model build based on 4 pre-selected case studies. I think one is in healthcare, one is in education, one is in ICT. I can't recall what the other one is on, but there's some case studies to apply. Then there's in-class training, which I mentioned that since the advent of COVID has not been very common, but then sometimes we still have those sessions. Yeah, so that's in class. Then yeah, that brings us to just showing you what then the work that we've been able to do with the various entities, from public sector, financial services, manufacturing, the different entities that we've been able to work with in terms of financial build, financial modeling training under the FAST standard, which largely has been on corporate finance, financial modeling, and valuation. But we've also had some project finance training. And as you can see, we've had interactions with entities from different jurisdictions, and we've been able to continue to spread the word on financial modeling training from DFIs to regulators to the big four and amongst others. Yep, and that brings me to the end of my monologue. So I'll throw it back to you, George. Maybe we can then get into some Q&A. Thank you.
Okay, thank you. Thank you, Steve, for that succinct presentation. At this point in time, I see we still have some couple of minutes. We'll be able to check some questions, and I would advise that those who have questions probably leave them in the chat, or we'll be able to unmute you to ask and have Steve address your questions. You can raise your hand in case you have any question. Okay, I'll go first. Steve, my question is, in the event, let's say you've gone through the Investia course outline. Financial modeling is all about practice and building the skills. It's not that within that period of 6 weeks that someone will be able to be exceptionally good at the skill. So what sort of advice would you give to some of the attendees who are probably not employed in sectors where the skill is required to, keep on improving?
Great, and that's a very important question. So something that I've always told participants who then undertake financial modeling training is that I've always told them to practice. And I've always told them that think about life after your current employer and what you'd be able to, what your value proposition would be to your next employer, or even to yourself, say if you are to go solo. So my experience in financial modeling training is that you'd find that self-sponsored participants are more keen on the course, in undertaking the course and applying it more than employer-sponsored students and or participants. And I always tell them that, you see, with financial modeling, if you don't practice, then it's just a waste of time, because then you forget the concepts, you lose on efficiency, you're not as agile as you would want to be, you will forget some concepts. So as you rightly say, George, that it's all about practice, and you don't have to wait to be given a work assignment, or you don't have to wait for your employer to give you work to do. It's something that you can be able to do on your own, so as to ensure that you always have the skill sets on your fingertips, and you're applying as much as possible. So even for the guys who are not currently employed, or those who are still maybe are students, you can be able to get material to keep practicing as much as possible. George, I hope I've answered your question.
Yes, you have. And also a way that one of the means I used when I was also learning financial modeling was to start off with information that's readily available. So you have quite a number of companies that are listed on the various stock exchanges across the East African region. So you can start by picking interest in a particular sector, reading a lot from their financial audit reports, management presentations, gives you a sense of what are the main drivers of that business. Then you keep on practicing and building financial models. Perhaps you'll notice that maybe one of the companies you've considered is actually undervalued and gives you the chance to also partake in investing in itself. So thank you, Steve. You've addressed my question. I see John Okumu, you have your hand raised. You can go ahead and ask. You can actually unmute yourself.
Yes, thanks. Thanks, George, and good morning, everyone. Thanks, Steve, as well for that insightful brief. So I'm a financial modeling and valuation practitioner as well, and I wanted to get your opinion on whether you believe knowledge of or a bit of experience with coding and programs such as VBA, etc., is necessary for one to become a good modeler.
Thank you. Thank you, George. So, okay, it helps, but I wouldn't say it's a prerequisite, because that one will just be scaring away potential modelers. So it helps let me say, it will be an added advantage. If you know coding, it will be an added advantage, but not knowing coding and VBA doesn't keep you from being a good financial modeler. You see, the thing, and as I'm sure you know, that thing about modeling is, and modeling efficiently, is that it requires you to know or build your experience in use of spreadsheets and functions and formulas and so on. But over time, as modeling has evolved, there are also other, I mean, there've been development of macros, for example. So FAST also comes with certain macros that aids in terms of helping you, that aids in being quicker or efficient in terms of Excel productivity. So with those kind of macros, so there are fast macros. I'm sure you've interacted with the Wall Street macros. There are can't remember the others, but over time there are macros that make work easier with respect to modeling. So yes, coding can be, is an added advantage, but doesn't prevent anyone from being a good modeler. I hope that answers the question.
Yes, it does. Thanks.
Thanks.
George, you're on mute.
So there's someone who has asked, how much is the training, Steve, in the chat?
Oh, great. So I think so that we're still working on with CFAC, and I'm sure there'll be some communication out soon once we schedule some training. And Leanne, I hope I've answered that correctly.
Okay.
Sorry, yes, you have. Good morning, everybody. I'm Leanne, Marketing Manager for Invest Africa. And bring your attention to a chat that I've just shared. Please fill in the form so that we can contact you once we have the training dates announced.
Just to reiterate what Leanne has said, is that we're still, given that this is a collaboration between Investia and CFA Society East Africa, so we'll be able to inform everyone on the pricing once that's finalized. So there's a form in the chat that you can use to leave your details. So once we are done with this internal process, we'll definitely be able to reach out to you and let you know what packages are available. Okay, Hilda had her hand raised.
Yes, I had my hand raised. Just in case anyone may not be able to hear me, please do tell me. So my question is, previously, I had begun financial modeling, but it's only recently that I've been introduced to the FAST standard. And my question is, I've noticed that in the FAST standard, there seems to be a specific order on how a calculation block should look. So I don't know if there's actually a specific order, because I think I've done some practice models from the FAST website, and I noticed as if there's a specific order in which calculation blocks are arranged. And I don't know if, Steve can confirm if it is so. And also, I have a question also about the flags, and I keep on getting confused on whether, if you put a flag in a calculation block, is it a must that a subsequent calculation line has to be linked to it, or can a flag just be a line item on its own without it having any dependence? That's my question.
Thank you, Hilda. So I'll start by talking about the order that you speak about and calculation block arrangement. So let me create some context to give some background. We all know that modeling is a lot of work. I mean, modeling is not a walk in the park. That's number one. Number two is, since we know that modeling is a lot of work, then again, based on your experience with the reviewing models or looking at models, you don't want to get lost in the numbers. You don't want to get lost in the disorganization of a model builder. And that's why, again, as I mentioned, that FAST then advocates for order in modeling. And so part of that order and part of the structure that I spoke about is the calculation block arrangement. So the idea is to ensure that the calculation blocks are properly arranged and are in order, so that if you need to query a calculation, then you're not all over the place. You get to that calculation block, and as I mentioned, that that a formula should be the same from the first column to the end, whether the end is 10 months or 240 months away, it should be the same. So hence the reason why FAST pushes for some order in terms of the arrangements and the calculation block, because the basis of FAST is that models are built for users, not for the model builder. They are built for analysts, they are built for investment committees, they are built for decision making. The idea is if, say, today you're told that you're making a presentation to the board in an hour, and you've been given some changes to make on the model, then you don't start sweating. You know, if say I'm to change, say, remuneration rates for the GM, or if I'm to change inflation, or if I'm to change the capex amounts, for example, then first will ensure that you can be able to turn around that within a few minutes or in under an hour. So that is my response on the issue of order. About flags, and so for the purposes of everyone, so flags are used in the financial model because they help in terms of telling you, say, to signify that there'll be an activity happening. So which activity is it, and when is it happening? Say, for example, you're modeling funding, and there's debt as part of the funding, and you're told that this debt has maybe an availability period of say 3 years. Then you can build a flag for the availability period of 3 years, or you're told that you can be able to draw down on this debt by the end of Q2. So then you'd use a flag to note that by 30th June, the debt amount is available for drawdown. Yeah, you can also then use a flag to represent the debt tenor. For example, say it's a 5-year term loan. You can use a flag to say that this term loan then runs for a period of 5 years. So Hilda, in terms of the use of flags, no, they don't have to be linked to a previous calculation or to a subsequent calculation. What matters is knowing what the flag is to be used for. If it is a forecast period flag, for example, which then basically says that these calculations want them to apply only in the forecast period, then that will be applied to almost all calculations, all calculation blocks. Yeah, but if it is just for a specific purpose, like for the one I mentioned about a debt tenor or a debt drawdown date, then it will only be for that particular calculation block. Hilda, I hope that is sufficient.
Yes, you have answered it very sufficiently. Thank you.
You're welcome.
All right, thank you, Steve. There is also a question in relation to in the event someone signs up for the online self-study, for how long will they have access to the material? Is it a lifetime access? Then the second question is, once they sign up, will they be able to consult or interact with the Investia team in relation to the course material?
Yes, so the answer to the first question is in the affirmative, that it's a lifetime access. And then on the second one is that, yes, we normally allocate some time for interaction with our team members, just to ensure that you're comfortable in the use of that license. If there are any questions, our team members can be able to answer. Thank you.
Okay. Yeah. Then the other is there's someone who is an accountant, and they would like advice on how they could, make use of financial modeling skills in order to avoid it being a misaligned interest. So how can they, despite, let's say, being an accountant, how can they use such skills in their course of work?
Yeah, so modeling is right down the alley of an accountant, of an accountant's day-to-day work. Because, I mean, think about it. A model will help you in terms of, say, budgeting and forecasting. it will help you in terms of, like I mentioned, the case with a client of ours, quantifying a strategic plan, so that if, say, for example, the business, maybe it's an FMCG doing, say, foods, for example, and they are saying that in the next 5 years, we'd like to expand within the East Africa region, and we'd like to our market share to grow to, say, maybe 20%. That would mean that our revenues maybe grow, say, 30%. Then, as the accountant, you'd then, through financial modeling, you'd be able to add value to your business, to the business, by asking questions around, okay, what does a 30% growth in revenue mean in terms of resources, for example? Do we have the right number of personnel? Does it mean then our team complements grow? Does it also come with the CapEx that maybe on the top line, yes, we are saying our revenue is growing 30%, but we are not looking at our capacity. Do our production facilities as they are today support that kind of growth, or do we need additional equipment? Now, once you've established that you need additional CapEx, then resources in terms of funding, do we have sufficient funding for that, or will you then require to will you be required to get some debt or some facility from the bank, or ask the investors to the shareholders to inject some capital? So as an accountant, modeling revolves around an accountant's day-to-day, because I mean, think about it. One of the outputs, or the key output of financial modeling, is financial statements. And I mean, who prepares financial statements better than accountants? Thank you.
Okay. Then there is also another question. Moses says his interest is in project finance. Do you focus the training for the different specialties?
Yes, Moses. So as I mentioned, that we have training in both corporate and project finance. And so one of the things that we can be able to do in our partnership with the CFAC is maybe do a poll of some sorts in terms of establishing the numbers for project finance, or the amount of interest in project finance training, schedule that sometime in the course of this half of the year, and then look at subsequently what the demand is for corporate finance training. But as I mentioned, yes, we do offer both, and we also have online classes for both. Thank you. George? George? Leanne?
We seem to have lost George.
In fact, I was calling your name just to check. Maybe I'm the one I'd lost myself.
Okay, I'm just emphasizing for people to fill in the registration form, so that we know, so that we can call you or just give you information in regards to the different cohorts that we'll have throughout this year. Someone has asked, what about training for financial modeling for financial services and insurance, whether we do that?
Yes, so one of the courses we have is for financial modeling training for financial services. I think is the case studies for a bank, and then and we've also built insurance models. So again, it's just back to what the training needs are, and then we should be able to put together a solution for it.
There's another question of how much will charge project finance. However, we have said that we will communicate this once we finish the internal processes, and then we'll send out flyers with this information. So just be on the lookout for that. All right. I think we can close, there being no other questions. Oscar, I am answering your question. You've asked me a question directly, and I'm going to answer that. I think, Steve Ogada, thank you so much for the presentation and informing us about financial modeling training and all that Invest offers. Maybe you could share some closing remarks.
Sorry, Lian.
I asked for closing remarks.
Oh, from me?
Yes.
Okay, thank you. Thank you, Lian, and thank you all for making time for this. I hope it was an informative session, and that there are some key takeaways from it. And I think that financial modeling training or practice will go hand in hand with your CFA training, and also by extension your professional experience. So thank you very much, and we hope to see you undertaking financial modeling training under FAST. Thank you, Lian.
All right. Thank you so much. Ruth, would you like to say something on behalf of CFA? All right. Also can't find Ruth. So thank you so much, everyone, for taking the time to join and participating in the question and answers section. I hope you filled the registration form so that we can reach out to you once we have the dates ready and the pricing is agreed upon. We hope that this will be a beginning of your continuation of your financial modeling journey. And thank you so much for joining us, and have a good day. Bye.
Thanks. Good day.